Hello family, thank you for tuning into this video today. Hey look guys, I've got something pretty exciting for you. I'm going to be jumping in and breaking down the 5 hottest suburbs in Gladstone right now. So if you're an investor and you're looking for an investment property in regional Queensland or Gladstone specifically, stick around. I think you're going to get some tremendous value out of what we're going to be covering here today and breaking down the exact reasons why these 5 suburbs are the hottest in the marketplace of Gladstone right now. Let's dive in, guys. All right, before we dive in, I'm just going to give the business a little bit of a plug here. So, my name is Troy Simbassini. I am the owner and head of research of Capricorn Life Buyers Agency. Capricorn Life Buyers Agency is one of our subsidiary brands under the Life group of companies. So, we've got Capricorn Life servicing the central Queensland area, which includes Rockhampton, Mackay, Gladstone, and Bundaberg. And then we've got Tropical Life servicing Cairns, Townsville, and Port Douglas, so the North Queensland area. And we're generally helping buyers that fall into these categories here, struggling home buyers. We work with a lot of investors looking to get a better result than DIYing. We work with a lot of interstate and geographically challenged buyers as well. And look, guys, if you feel as though you fall into any of those categories and you're struggling to buy, let's say in Gladstone or regional Queensland specifically, feel free to reach out and have an initial chat. More than happy to see if we might be able to add value to your journey. You can visit us on Facebook, visit us on that website, or give us a call on that number and book a call with me or one of my team members. We'll be happy to give you a hand. And look, guys, something very exciting is also happening. In about 4 to 6 weeks, we'll be launching Life Asset Management. So we'll be providing asset management slash property management services in all of these regional Queensland locations very soon. So if we don't help you buy a property, maybe you might be able to let me and your team, my team, manage your investment for you as well. So we're going to be jumping in and looking at the 5 hottest suburbs, but to determine which were the 5 hottest suburbs in the Gladstone area, these suburbs needed to tick all of these boxes, and when compared to other suburbs across Gladstone, their data looked the best. So these suburbs we're going to be analysing today, all of these key data points here, these suburbs have outperformed all others across these categories. So they've outperformed in the median house price front, so their median house prices have grown the most over the last 12 months. Their days on market figures are very good in comparison to other suburbs, and also their vendor discounting rates. Their online search interest rates are very high relative to what other suburbs are doing, and their absorption rates are also very high relative to what other suburbs are doing. So we're going to break down each suburb and how these suburbs are doing in each of these individual categories. Let's dive into that now, guys. Now, the first suburb is called Glen Eden. Now, let's go in and have a look at the data for Glen Eden. So, the median house price currently for Glen Eden is $420,000. Some of the high level suburb profile information. So, it has about 1,300 unique households. And look, guys, in comparison to the wider Gladstone landscape, I'd probably say it's one of the more smaller suburbs. There are a lot of suburbs that have over 2,000 dwellings, so I'd say Glen Eden is on the smaller side. It has an owner occupier percentage of 57. To me, I generally like to see suburbs with an owner occupier percentage above 65%. Sitting at 57% just suggests to me that there's still a lot of investor owned property in that suburb. It has a median rent per week of $460 per week, which is pretty strong as a median. However, if you go in and do your individual due diligence, you'll actually find that there are properties that will rent for upwards of $500 per week, and properties that will rent a lot lower than $460 per week. So treat that as it is, and remember that's always a median. So treat everything on a case by case basis. There has a vacancy rate of 1.4%, which shows that rents are. Well, the rental market is pretty tight here. Obviously, I like to see that under 1%, but nonetheless, that's still a very good rental vacancy rate. And stock levels in terms of how much supply is in the marketplace in this suburb, 0.4%. So stock levels are very tight, sitting well and truly under 1% there. So that's sort of the high level suburb information there, guys. Now jumping in and looking at the Glen Eden median house price, so it currently sits at $420,000. Now, if we looked at it over the last 12 months, it's actually increased by 11% from $374,000 and a total of $46,000 in growth for that period. So yeah, look guys, this is one of the suburbs that has had double-digit growth in Gladstone, and look, that's very good overall because there's not many suburbs across regional Queensland or even Gladstone for that matter that have done double-digit growth in the last 12 months. So these suburbs are very hot right now. And look, if you bought 12 months ago, you'd be doing all right, $46,000 potentially in equity. But look, at the end of the day, I don't have a crystal ball. I don't know what's likely to happen going forward. All I can really tell you guys is that at a $420,000 median house price for a suburb like Glen Eden, which is quite a desirable suburb in Gladstone, has a lot of blue chip stock, has a lot of good pockets, I still think that $420,000 price point is very cheap, particularly when you start to benchmark that to the blue chip areas of Bundaberg, blue chip areas of Rockhampton, the blue chip areas of Mackay, Cairns, Townsville. Majority of their blue chip suburbs have a median house price of around that 550. So Glen Eden is a lot more cheaper. So I still think this median house price has a lot of wiggle room in the short term to grow, and I'd be targeting properties around that $420,000 price point to try and get as much upside as possible. So from a days on market point of view, it sits at 40 days currently and has averaged around 40 days for the last 9 months. So that's a very good day on market number. 40 days tells me that most properties are going under contract there within the first 2 weeks. Generally, in really hot markets, these days on market sit under 30 days, where properties are usually going under contract within the first 1 to 4 days, so things are transacting very fast. For it to sit at 40 days just tells me that, yeah, it's taking on average 1 to 2 weeks for most properties to go under contract, which is a very hot market still, but it's not a complete frenzy, but shows me that demand is strong nonetheless, particularly because it's been maintained over a 9-month period as well. And if you keep an eye on that, if you are an investor and you're keeping an eye on certain suburbs, if you keep an eye on this metric or this data metric of 40 days, and if you start to see that trend even lower, that's when you know demand is starting to heat up even more and more. And then that's when you have to start to, act very fast if you are looking to buy in these markets as things start to go under contract very fast. So days on market figure very strong for this suburb, guys. The vendor discounting sits at 0.8% and has been trending downwards for the last 12 months. And when I looked at this data 12 months ago, the vendor discounting rate was around like 3.54%, and it's now down to 0.8%. And basically all the vendor discounting rate is how much a property is discounting for in order for it to be sold. And because it's decreased now over that 12-month period down to 0.8, just goes to show now that most properties aren't discounting at all. They're actually selling around list price or actually above list price in order for them to be sold. Whereas 12 months ago, you could have got, a $450,000 house at a 4% discount. So now you can get a $450,000 house at a 0.8% discount, which is hardly a discount at all. And it's just a market now we have to navigate with extreme caution, and I don't think lowballing will potentially work in this suburb if you're looking to buy in it as a buy strategy, guys. So yep, vendor discounting data for this suburb is very strong. Also, so Glen Eden has also had a lot of interest on realestate.com, 850 unique buyers per listing. So it's really outperforming the market from a listing point of view or a visitation point of view on realestate.com and Domain. What we find is that most of the the lower suburbs tend to have online search interest rates around that sort of 400 unique views per listing. Some of the really busiest suburbs in the capital cities have around sort of 1,200 to 2,000 unique views, and in regional Queensland we find that the hotter suburbs are range between sort of 800 to 11 to 1,200 unique views per listing. So Glen Eden sits at a really nice online search interest rate of 850 there, which shows that demand is very strong in the area. And with stock levels sitting at 0.4%, so that basically means that every property that's going online is getting smashed by a lot of online visitation. And look, this is not an accurate reflection of the demand in the market, but it gives you some baseline data to work from, just to show that how many people might be potentially interested in buying a property in that suburb, or how many unique clicks are happening per property. So look guys, for Glen Eden, that is some very good figures there. And the last data is the absorption rate, which sits at 102%. So the absorption rate basically is a percentage of how many properties have sold in comparison to their listings. So we can see here that there's been 45 listings in the last 6 months and 46 sales, which has resulted in the 102% absorption rate. So everything that's gone onto the market in the last 6 months in Glen Eden has been chewed up and swallowed, which suggests to me that demand is very strong in this suburb. So look guys, this suburb is ticking all of these boxes, and as a result, it is one of the hottest suburbs in Gladstone right now. And look, when it comes to Glen Eden, this is probably what I see as the best opportunities in Glen Eden right now, are these 4-bedroom, 2-bathroom, 2-car homes on over 600 square meters of land, these low set brick homes. You can still get them for around that $450,000 to $500,000 price point. And if you can get your hands on one of these, I think these are the best opportunities in that suburb and present really well. And if you actually look at the suburb broken down into various pockets, so Glen Eden still has homes that sell upwards of 600,000 up to around that $800,000 price point. So that's probably the higher end of the suburb. Has a sort of mid-tier pocket where most things sell between sort of 450 to 600,000, and then you have this lower end of the suburb where properties sell between sort of 300 to $450,000. So I'll be targeting something like this, in that sort of 450 to $600,000 pocket, and try and get that property as close to the 600 to $800,000 pocket. So get as close to where those two parts of the suburb intersect, and I think you're going to get a really good result. So I'll be checking out Carmela Close and looking for properties in and around where Carmela Close and Glen Eden is, guys. Now, the next suburb we'll be looking at today is New Auckland. So New Auckland, it has a median house price of $432,000. It has about 2,400 households. So as you can see, in comparison to Glen Eden, which is one of the more smaller suburbs, it has an extra, 1,000 or so dwellings, so much more bigger. It has an owner-occupier percentage sitting around 61%. Again, I said I'd like to see it above 65%, but it's getting very close there. So it's quite a stable market, I would say, still, with a lot of owner-occupiers there. Median rent at $460 per week. I think, again, if you go in and look at this suburb and individual properties, you'll actually find that they're renting a lot higher than $460 and a lot lower than $460. So just make sure you do your individual due diligence on each property. Vacancy rate sitting at 1.9%, a little bit higher than Glen Eden. I'd probably like to see that under 1%, but still under 2% is still an okay rental market in terms of supply. And in terms of stock levels or listing volumes, currently sitting at 0.5%. So from a supply point of view of opportunities coming to market, very, very low levels of supply here, and is exactly what you want to see when you're investing in suburbs, is low supply and high demand. So we can see here that the median house price in New Auckland has grown by 13.2%, so slightly outperformed Glen Eden in the last 12 months. And it's grown up to $432,000, but it's basically come from $375,000. So you would have made $57,000 in the last 12 months if you invested then. So that's a lot of growth in the marketplace. And again, double-digit growth for a suburb like New Auckland is very, very good in comparison to the wider regional Queensland landscape, and in comparison to what a lot of these other suburbs are doing in the area. When we've benchmarked these top 5 suburbs, the lowest suburb grew about sort of 4%, and the highest was, I think, New Auckland coming in at 13.2. So the scale between sort of high and low is is very, very different. So when you see these suburbs with double-digit growth, you know that they're generally quite hot suburbs from that respect. So yeah, $57,000 over the last 12 months. It's done some tremendous numbers, and now sitting at $432,000 as a median, probably $12,000 more expensive than Glen Eden currently. But as I said about Glen Eden, I think that $430,000 price point, I still think it's good value relative to some of these other regional markets. As New Auckland, I'd probably class in the category of more of a blue chip area as well, and still as a blue chip area, it's still very affordable in comparison to Rocky, Bundaberg, Mackay, Townsville, Cairns. I still think that those suburbs are like $100,000 to $150,000 more expensive. So um, if Gladstone at a macro fundamental level keeps kicking along, the economy stays healthy, people keep moving into the area, government continue to stimulate that economy, I still see a lot of wiggle room in this median house price here to push up around that sort of 550 in the next couple of years for sure. Um, Days on market is very strong as well, sitting at 30 days and has been decreasing for the last 12 months. So 30 days is a really hot market. Very um, very much lower than Glen Eden. Glen Eden was 40 days. New Auckland at 30 days. So that just means that Glen Eden as a market, if you are looking to buy an investment in the suburb, you have to be probably very fast. Things are going under contract a lot quicker here than they are in Glen Eden. And that just means, yeah, things are going under contract, I'll probably say within the first sort of 1 to 4 days. So very hot from a demand point of view. And it says here that it's been decreasing for the last 12 months. And when I looked at the data, it sat around 50 days or 45 days 12 months ago. And just over time, it's gotten tighter and tighter. Now things are starting to really transact a lot faster. And um, as stock levels have gotten tighter and tighter, so stock levels sat at around sort of 2% 12 months ago and now at 0.5. As stock levels have contracted, days on market has also started to lower itself there as well. So if you are buying in this market, um, be very aggressive and move very quickly on the opportunities that arise. Vendor discounting sits at 0.9%, so that's a very healthy vendor discounting rate as well, and it has been trending downwards for the last 12 months. So much like the days on market and the stock levels, the vendor discounting has trended down and followed the trend of those other two data points, and that tends to happen as suburbs start to heat up. So if you are looking to buy in this suburb, properties are discounting still at around that 1% or 0.9%. So yeah, if you are making an offer on a $450,000 property, you can maybe use that as a bit of a guide around how to structure your offer in terms of price. But again, treat every property on a case-by-case basis, as not every property might sell at that discounted level. Things might sell well and truly above list price or at list price as well. And we can see here now the absorption rate is 141%, which is an insane absorption rate figure, sitting well and truly above 100%. So that just means that there's been a total of 65 listings in the last 6 months, and there's been a total of 92 sales. So sales have actually outperformed listings, and you're probably thinking, oh, what's the go there? How can there be much more sales than there are listings? So over the course of that 6 month period, stock levels have built up to a point where there's been a pool of properties there, which is called the inventory, and that inventory pool has decreased over time. So over time, the listing velocity each month has not been enough to sustain that demand. So all those properties each month have been chewed up and swallowed by the market. So that means that it starts to then dip into that inventory pool, and that inventory pool gets smaller and smaller now. And the last time I checked, that inventory pool is very low. It sits at around sort of 2 weeks, which suggests that the demand levels in this suburb is very, very strong. So the absorption rate, guys, very, very high. So if you are looking to buy in this market, tread with extreme caution and be quite aggressive, because things are being purchased at a higher velocity than the listing volume in that suburb. Now, if you're looking to buy in New Auckland, if I were buying in New Auckland, I'd be targeting something like this, which is a 3 bedroom, 2 bathroom, 1 car, a brick base, hardy plank home on 600 square meters, Lorikeet Avenue in New Auckland. I'd be targeting something like this, which is in the, if you break down the sort of three pockets of this suburb, there's a 600 to 900,000 dollar pocket, there's a 450 to 600,000 dollar pocket, and there's a 300 to 450,000 dollar price point pocket. So I see a lot of good value in this 300 to 450 pocket currently, particularly where you get homes like this that have that dual occupancy or dual split level homes. They give you much more floor area. They give you the ability to renovate and add value in the future. They give you that ability to have a rumper space downstairs or that extra living area. And that just creates more floor area for it to rent at a higher rental premium. Because I find that majority of the good, let's say 4 bedroom, 2 bathroom brick homes on 450 square meters are sort of pushing up around sort of 550 and above now, whereas I still think you can get something like this, which is relatively good value, about $100,000 to $150,000 cheaper in the suburb. And I think these ones have a lot of wiggle room to grow also, because we've seen similar houses to this in places like Frenchville and Rockhampton, places like Woogaroo in Townsville, places like North Mackay and Mackay, where you could have purchased these properties around this price and they've shot up to 450, 520, 600,000 very, very fast. So I like these ones, and I think these ones are the best opportunities in that suburb. But again, if you have the ability to buy in these better pockets, definitely go and check out those pockets as well. But I'll be buying these type of properties at this price point in this suburb, guys. The next suburb is Kora, and it has a median house price of $395,000. Has about 1,100 unique households. So, in comparison to New Auckland, a much more smaller suburb, and it's more closely aligned to Glen Eden in terms of its size. Has an owner-occupied percentage of 70%, which is very, very good. Much more stronger than Glen Eden and New Auckland. Has a median rent of 550, so slightly less. Has a vacancy rate of 1.7%, so probably doing the best out of the three so far, and has stock levels sitting at 0.9%, which is under 1%, which suggests that supply levels here are also very tight. The median house price has grown by 9%, sorry, excuse me, in the last 12 months from $359,000 or $36,000 in total. So 9%, so just shy of double-digit growth there, but growing at 9% nonetheless. It's a suburb that's done some really good things. Days on market's probably the hottest out of the three suburbs covered so far, sitting at 25 days. So if you are looking to buy in this suburb, you've got to be very fast. Things are going under contract very quickly here. And as you can see, it's been decreasing for the last 3 months from 50 days. So just 3 months ago, it was sitting at 50 days and now it's sitting at 25 days. So a lot has changed in the space of 3 months, where the market has heated up now, right to a point where it's virtually halved its days on market, and things are going under contract very, very fast. And when you see this days on market metric sit under 30 days, that's where you know there's a lot of cash-based offers in the marketplace, because people that buy with cash don't necessarily have to settle in 30 days. They settle a lot quicker than 30 days. So a lot of cash buyers might be active in this suburb of Kora as well. So if you are buying, just be wary that you might be coming up against cash-based offers in this suburb. The vendor discounting figures sit at 0.5% and has been trending downwards for the last 12 months from 3.5. So 12 months ago, sitting at 3.5%, that means you could have bought a $500,000 property at a 3.5% discount. Now it's hardly the case. And given those days on market figures and those low stock levels, I think this is a very hot market, and I don't think low balling or offering any discount on a property or well below its list price is going to get you a deal over the line. I'll be offering at list price or above as a starting point here, guys, because this just suggests that trend over the last 12 months has gone to a point now where the market's really, really heated up. and it's made for some competitive buying here, that's for sure. The absorption rate is sitting at 97% as well. So those were the amount of listings, and those were the amount of sales, resulting in the 97% absorption rate. So that also shows that demand in this suburb, guys, is very strong and very high. So a lot of properties are going to market and being sold within their time on the market. So Kora, guys, yeah, really good value, I think, at $395,000, particularly with that owner occupier level sitting at 70%. It's really good for a Gladstone suburb to have an owner occupier percentage around that, because you're well buffered from the larger sort of, socio-economic space regarding Gladstone. Gladstone has been historically more of a volatile market, and I say the best way to buffer yourself from volatile markets is to try and cluster yourself around as much owner occupiers as possible, because they're the ones that tend to create the better market stability. When things change in the marketplace, owner occupiers aren't the ones that are panicking and selling. They're generally there for the long term. When you have too much investor-owned stock in a particular marketplace, when things start to go a bit south, or the market starts to slow down, or the economy starts to take a bit of a downturn, they're the ones that panic sell. And when you have that market injected with a whole bunch of investor-owned property, it floods the market with supply, and things get sold at a discount, then it starts to erode away that median house price. So look, Kora, really good opportunities, I think, here in Kora, guys, particularly at that $395,000 price point. I think it has a lot of wiggle room to push up to that sort of $500,000 median in the next couple of years. Now, if I was buying in Kora, I'd be buying something like this, which is a 4-bedroom, 2-bathroom, 2-car property on just over 800 square meters, a low-set brick home as well, side access, open floor plan, and a non-specky home. So I'd be targeting the ones that your more boutique build, your owner occupier builds, as opposed to the spec type homes, the investor stock. I find that the owner occupier homes tend to have more rental appeal and more desirability, and they tend to give you the much more premium price on resale. So I'll be targeting something like this, guys, if I'm buying in Kora. And if you look at the suburb makeup in terms of its pocket, so it has a upmarket pocket that homes sell for between sort of 6 to 850. You have sort of a middle part of the suburb where things sell between sort of 450 to 600. Then you have a lower end of the suburb where things sell between sort of 300 to 450. So this property here on Waratah Street would sit in that sort of middle ground pocket where things sell between sort of 450 to 600,000. And I think that's where a lot of good opportunity, I believe, still sits with Kora. You can still get these 4-bedroom, 2-bathroom, 2-car homes on low set brick, in that sort of middle pocket between sort of 450 to 600,000. And obviously, the closer you can get your property to where the more $600,000 to $800,000 homes are transacting, you're gonna be in a more better pocket as well. So try and target a property like that, and I'll be looking up the street here, Waratah Street, and finding properties that are selling around where Waratah Street is. All right, suburb number 4, we have Clinton, and Clinton has a median house price of $415,000. Looking at the suburb sort of profile, households 2,900 properties. So one of the more bigger suburbs in the Gladstone area, and in comparison to those other suburbs, probably the biggest so far. Has an owner-occupied percentage of 65%, so right on that sweet spot, which is what I like. I think anything above 65%, you're kind of well buffered from the broader socio-economic landscape of the Gladstone area. Rents similar to those other suburbs discussed today, sitting around that sort of $450 per week. Vacancy rates under 1%, which is good, at 0.9%, and stock levels sitting under 1% as well, which are very healthy. Healthy if you're a buyer or investor chasing capital growth, sitting well and truly under 1% at 0.4. Now, the median house price for Clinton has grown 12.2% in the last 12 months, from $364,000, or a total of $51,000. So, yep, double-digit growth for this suburb, and has done really well in outperforming a lot of other suburbs in Gladstone, and outperformed a lot of suburbs across regional Queensland as well, increasing by that 12%. And coming off a relatively low base there of 364 and really pushed up to that 415. But even at 415, at a median house price, Clinton, rather blue chip area as well. Still a lot of nice properties there, nice pockets, a lot of nice stock, quite a convenient location in terms of it being well connected to Gladstone. Um, Very affordable, guys. Very affordable at 415. I can really see that pushing up to close to $500,000 in the short term. I think very soon because very good value. I think when benchmark compared to a lot of these other blue chip areas across other regional Queensland hubs, still very affordable despite it growing 12% over the last 12 months. Days on market numbers. Look, guys, days on market currently sit at 39 days and has been decreasing for the last 8 months from 60 days. So yeah, it's basically dropped off or shaved 20 days off its days on market number over the last 8 months. So the market demand has gotten stronger and stronger, and then properties have started to sell faster and faster over that period, right down to a point now where sitting at 39 days, which means that most things are going under contract within the first 7 days of going to market. So if you are a buyer looking to buy in Clinton specifically, yeah, you've got about a 7 day window to try and get something under contract. But again, on a case by case basis, properties might sell a lot faster than 7 days. So just do your individual due diligence there. Vendor discounting sitting at 1% and has been trending around 1% for the last 6 months as well. So we've seen a decrease in days on market and a trend where vendor discounting has maintained 1% sort of figure for the last 6 months. So that's very good on a $500,000 purchase. And, you're getting a 1% discount. What is that? $5,000 off there. So hardly a discount, and it's maintained that trend for the last 6 months, which shows that there is sort of a really good demand in the marketplace there. And if that starts to drop well and truly under 1%, that's when you start to then see the market really going into a situation where it's offering well and truly above list price in order to get a deal done. So something might go on the market for $450 and you need to pay $470, $480 just to get that deal done. And we see that in Rockhampton right now, we see that in Mackay, we see that in Townsville, we see that in Cairns, and Gladstone is, on the cusp of, I'd say, doing that, in the next 6 months, I would say you'll start to see a lot of that happening. It's happening at a small scale right now. Individual properties are doing that, but not across the whole suburb. So, yeah, that's vendor discounting. We've seen these really strong absorption rate figures as well at 124%, which shows that demand is also is very strong. Properties are going to market and getting chewed up and swallowed. So over the last 6 months, there's been 83 listings and a total of 103 sales. So listing velocity hasn't been enough to sustain demand. So the buyers have had to dip into the rolling inventory pool of properties that have rolled over each month. And yeah, that just goes to show that demand is greater than supply currently in this suburb. And if you are buying in the suburb, I think it has all the right ingredients here for me to see that median house price continue to rise. Still very affordable, a lot of good fundamentals. The demand side of the market looking very strong with days on market, vendor discounting, and absorption rates. And to me, that's sort of ticking a lot of boxes for this suburb to continue to grow. And if we actually look at its online search interest rates, 1,400 unique buyers per listing. So very strong online search interest rates here. If you compare that to a lot of the other suburbs, they sat at around 1,000. I think at the very start when we looked at Glen Eden was about 800. So this one has an extra 600 unique, 600 more unique viewers per listing. So just based on that, I would probably say demand is probably stronger in Clinton than it is at Glen Eden, or if it in comparison to, let's say, Kora or some of those other suburbs mentioned. So yeah, guys, good to see. Look, those online search interest rates that high as well. Very good for a regional hub to have that much interest. But if you also look at it, you can also see it's one of the largest suburbs as well, so 2,900 dwellings. So obviously the larger suburbs have a lot more sort of active buyers as well. So you have to look at the ratio between sort of interest to household ratio, and the higher that ratio, the I suppose riper that suburb is for picking. Now, if I was buying in Clinton, I would buy something like this, which is a 3 bedroom, 1 bathroom, 2 car property on over 700 square meters of land, a low set brick veneer home on a really nice land parcel. And if you actually look at the makeup of this suburb, it has a couple of different pockets. So it has a high end pocket where some things sell between sort of 600 to $900,000. Has a sort of middle end pocket where probably sell between sort of 450 to 600,000, and a low end pocket where things sell between sort of 300 to 450. I see a lot of good value still at the lower end of this suburb, in the pocket between sort of 300 to 450, where this property here sits, on a polo drive. Like, I think there's so much value because a lot of the good 422 opportunities are now sort of pushing up at around that sort of high fours, low fives, and I still think you can get some really good 3 bedroom properties under 400,000 still, or very low fours, and I still think they have a lot of wiggle room also to grow potentially up to that sort of 500 to $550,000 price point over the next few years. So I would be targeting these sort of properties, guys, if I was buying in Clinton. But again, if you have a budget that can get you into some of these better pockets, the higher end pockets, I'd definitely be considering those at the moment, as well. But I think the best value in the suburb sits at the lower end of the suburb, and buying something like this. So I'd be looking at a Polo Drive and targeting properties like this or similar in and around that area. All right, the lucky last suburb, guys. You've made it to the end. So the suburb here we're going to discuss is a suburb called Sun Valley. So Sun Valley has a median house price of $369,000. Looking at some of the suburb profile information here, has 580 unique households, so 580 unique households. So in comparison to those other suburbs, it's actually one of the more smaller suburbs. Has an owner occupier percentage of 70%, so very healthy owner occupier levels here, well and truly above that 65% sweet spot I like. Median rent's 410, so in comparison to those other suburbs, probably on the lower end of the spectrum there, probably $30 to $40 less rent you can get in this suburb, at a median point of view. Vacancy rate is probably a lot more tighter vacancy rate than those other suburbs at 0.5%, and stock level sitting at 0.2% is also very low stock environment here. Its median house price has done some amazing things over the last 12 months here. As you can see, it's outperformed probably all of the suburbs discussed today, rounding off at 14.4% in the last 12 months. So $53,000 in capital growth. So it grew from $316,000 12 months ago. So yeah, the benefit of hindsight would be nice, right? If you were to invest in this suburb 12 months ago, you'd be reaping the rewards now. But again, guys, look, I still think that median house price of 369,000 is still very, very affordable, very cheap when you compare that to other markets across regional Queensland. If you just compare that to down the road in Rockhampton, there's not many suburbs in Rockhampton now where you have a median house price that has a 3 in front of it. Most of those lower socioeconomic suburbs like Sun Valley, which is a more lower socioeconomic area, has a large portion of lower socioeconomic demographic than most of the other suburbs of Gladstone. You see a lot of those other suburbs in, let's say, Rockhampton, Mackay, Townsville even now, not many of them have a 3 in front of them. Most of those are pushed up to the low fours, mid fours now. But Sun Valley still has a 3 in front of it. So I think that still has a lot of wiggle room to get to that sort of 450 price point as well. So you can probably make $100,000 to $120,000 here, still buying at $370,000, I think. Days on market in the suburb, 40 days. So things aren't a complete frenzy there. Things are churning, but not churning as fast as some of the other suburbs. So 40 days, I'll probably say you have a 10-day window there to try and get something under contract, or most things that are going to market are kind of being wrapped up in a 10-day period, not absolute frenzy where things are wrapping up within the first sort of 1 to 5 days. But again, on a case-by-case basis, things might go under contract a lot faster. So if you are looking to buy in a suburb like this, just make sure you treat everything on a case-by-case basis and speak to those agents. And if we actually look at it, it's actually decreased um, for the last 6 months. That should be 6, not 60, from 50 days. So look, guys, it's a market where days on market starting to get lower and lower as well. So that 40 days on market might be 30 in another 6 months and moving towards a more hotter market. So you can potentially beat the swarm or get in sooner rather than later and avoid buying in 6 months where it's an absolute frenzy. So you can probably get ahead of the curve and try and get into this market a lot earlier, particularly if you are looking to invest and capitalize on the upswing over the next 6 months that might come from being in the market, but also avoid again that frenzy that might occur, particularly when it starts to get down to that 30 or 25 days going forward. Vendor discounting sits at around 1% and has been trending around 1% for the last 6 months. So similar to Clinton, things have been quite stable here in terms of price. But when you actually go back 12 months ago, things were discounting around 2-3%. So the market has really started to heat up to a point now where things aren't really discounting at all here in this suburb as well. So just make sure you also treat every property again on a case-by-case basis as well. But vendor discounting still very strong here. The absorption rate 210%. So that figure might look like absolute crazy figure. But if you actually look at the listing volume, given it's one of the more smaller suburbs, there's been a total of 8 listings in the last 6 months and a total of 18 sales. So there's actually not a whole bunch of supply that is coming to the market given the suburb is so small. So yeah, there's not many options there for the picking. And if you are looking to buy in the suburb, yeah, you got to try and take those opportunities as they come because the velocity of those opportunities aren't as frequent as you think they are. So yeah, 18 sales in the last 6 months or 8 listings in the last 6 months, not a whole bunch of supply, right, guys? So yeah, it is a market that's tricky to navigate, this one here in Sun Valley. And if you look at their online search interest rates, sitting at 209 unique listings per property. And again, not sort of knocking your socks off in comparison to some of the other suburbs discussed today, around 800, 1,000, 1,400. Given this is one of the more smaller suburbs at 520, yeah, still think that sort of figure relative to the amount of properties within the suburb, I still think that ratio is very, very high. So yeah, guys, a small suburb, hard to get into, but as a suburb, if you can get into, you're probably going to make some good coin given the scarcity of those opportunities and the depth of demand that's in this suburb at the moment, and still a very affordable price point in comparison to these other regional hubs. So Sun Valley, guys, is the last suburb in Gladstone that I think is going to do some really good things over the next sort of 12 to 18 months. And if you can get in, I think you'll do quite well. So if I were buying in Sun Valley, I'd be targeting something like this, which is a double brick home. And this one recently sold for $450,000 on Cairn Ross Street in Sun Valley. A 4-bedroom, 3-bathroom, 2-car property on 900 square meters at 450,000. Man, you pick that property up, you put it in Bundaberg, you put that in Rockhampton, you put that in Townsville, Mackay, Cairns. You're paying close to 600,000 for something like this, and to get it at 450, I think is really good buying. Sun Valley, despite it being a small suburb, it still has a couple of different pockets. It has a really small pocket, particularly the elevated parts that have the nice views of Gladstone, where properties actually sell between 600 to $1 million, but you don't get any change there for 600,000. So if you are looking to buy in the upper end of this suburb, you have to be spending a little bit of money. But obviously, if you can buy something close to where you get those views and where a lot of these more expensive homes are transacting, you're going to be in the really, really good part of this suburb and also a really, really good part of Gladstone for that matter. Most of the properties tend to transact, I think, at the lower end between sort of 300 to 450 right now. And then there's a small pocket of sort of this middle ground where properties sell between sort of 450 to 600,000. I think the best value in this suburb sits where you can buy stuff like this, the better quality stock, still in that sort of middle end of the pocket between sort of 450 to 600,000. Because as I said, you pick these properties up and put them into the some of the neighbouring regional hubs, you're paying a lot more for this type of property. And even picking up this property and you put that in Clinton, you put that in Glen Eden, Kora, you're probably paying close to sort of 550 again, so probably $100,000 more. Where you can buy this sort of property where you're going to get a rental premium, you're going to get big land, you're going to get good bedroom and bathroom configuration of that 422, which is probably the best sort of opportunities in the marketplace when it comes to sort of rental premium. You get that more premium rent, and it caters to a lot more renters in the market, your families and things like that. So you can still buy these 422s for 450 to 500,000. I'll be targeting these ones in that suburb, guys. Woo! All right, guys. Look, if you made it all the way to the end, thank you for tuning in. I really hope you got some value out of what was covered there today, and good luck if you are looking to buy in any of those suburbs. But if you need a hand getting into the Gladstone markets or some of those suburbs specifically, feel free to reach out to me and the team at Capricorn Life Buyers Agency. Again, those are all our details there. And as I said before, guys, if you don't end up using us to help you buy an investment, let us manage your investment. We're launching life asset management in a couple of weeks' time. So super excited about that, and we'll be more than happy to manage your investment going forward as well. But thank you for tuning in, guys, and see you on the next video, family.